Hi, everybody. Big Fed week. Thanks for asking about the COVID. I'm doing okay.
How are you, mate?
I'll put my camera on so you know it's not Weekend at Bernie's and just some recording of me, okay?
You doing all right, mate?
I'm doing all right. So,
This is good.
Tough old bird. You know, I think it's because I had my... Anyway,
shots.
Anyway, I'm just grateful that I didn't have
those special COVID meds. You know, the green growy ones.
Oh yeah, medical marijuana. So anyway, good morning, team.
Good early morning, Dale.
Morning.
Hello. Hey guys. So I mean, do you really want to trade in front of the Fed, knowing you're going to probably want to be flatter going into it? That's the whole week. When's the announcement? Wednesday?
Yeah.
Or okay, 2-day meeting type of thing.
Yeah, it starts tomorrow. Yeah.
Yeah. Okay. So I look at the euro, and right now it smacks of consolidation, just marking time after this will advance here. But I'm hoping that the Fed creates some type of spike down towards halfway back 61.8. Kind of the same strategy I was thinking of using if the ECB disappointed. I want to buy breaks, and the Aussie flirted with this wedge line and then closed underneath it Friday, and it's trying. So preferred longs would be Aussie, even over euro, and preferred shorts would be USD CAD. I'm thinking this may have been it. So, I want to sell some type of retracement if the dollar pops maybe up towards 107.5, 108. And that's pretty much what I'm thinking. I think everything's going to correct, including S&Ps. They could pull back, get some type of ABC, maybe back to here before they try and go again. I know you guys think ahead, and let me ask you, Ryan, do you look at charts over the weekend?
No, I don't. Usually, by Friday afternoon, I'm done staring at charts.
You're done. Okay.
Yeah, but it's I'm lucky because I'm trading full time. I have a running chart. If you know, I know where my levels are. Yeah, I don't need to look at a chart every 5 minutes to know where the levels are.
Yeah.
And then I just watch my 15-minute charts to day by day for the daily price action. So it's like you're the same. You've got your levels in your back of your head that you've been looking at for ages, and you build up the picture.
Well, when you get to be my age, you need the charts to remind you of what stayed in. What's in your head doesn't always stay there. You're thinking, Kman, going into the Fed this week?
Yeah, as I was saying this morning as well, and I started to have this feeling last week about a more rangy market, and this morning I was saying that it feels like, well, unfortunately, first of all, I couldn't be online on Friday, so I missed a lot of stuff, but I do think indeed that the mood has changed a little bit from buying dollar dips to selling dollar rips. And I wouldn't particularly look at euro dollar as such, but I can see other currencies where that may be more lucrative. I'm a little long I'm a little long Kiwi, looking to add some Aussie as well to it, for as long as the global economic data don't completely collapse. But I think euro and dollar may actually weaken a little together, because I found it a very dovish 50 BP hike from the ECB, and since then data coming in have not been particularly good on the European side nor on the US side. So
why don't we start gaming the Fed? Gonna ask Stel, 3/4 or a full point?
3/4.
Yeah, 3/4. I don't think they want to surprise the market, and 3/4 is enough. Either way, I don't think they're going to surprise 100 or 50. I don't think so. They're set on that. Inflation is still high. Data's hit and miss a little bit, but still not as bad as European data. So I don't see them diverging from that path. Not yet.
Any surprises on the presser that he could drop out there?
That is possible, in my opinion.
That is?
If they move 75, they are going, the top end of the Fed funds is going to be at 2.5, which some members have been telling us that it might be the neutral rate. Now, the pressure will be quite interesting, I think, to see what Powell wants to do next.
Yeah.
That may be the real driver, actually, more than the meeting itself.
Yeah, the pressure is going to be more important than the announcement, and obviously, unless they shock in the announcement, because everyone knows we're getting 75. They ruled 100 out. We know we're getting 75. It's all about the path. What they're going to do going forward. Are they going to slow down? Are they going to keep going 75s? That's going to be the clincher.
We also have GDP out this week, right?
Yeah, Thursday, I think.
Okay, so that's after the Fed, and
yeah,
they probably know.
Yeah, but we've got US consumer confidence tomorrow, so we'll get those inflation expectations again, which could cause a bit of a stir in the market if the old money markets and rates mob start running around with their pants on fire again. Could be some quick ops there ahead of the Fed.
And look how crude held major support again, putting in a higher low today. Maybe we're going to, make a push up towards, 110 or so in the crude. But boy, it sure been playing with this area.
Yeah, we dipped back below the 200-day moving average. And good morning, everybody.
Good morning, Blake.
Morning, mate.
And
good morning.
Yeah, I mean, there have been a lot of tests there. You don't want to knock on the door too many times. The door is weakened when you put your shoulder into the door the first time, and it's a little weaker now. And if it bounces, I don't know if I trust it one more time. And I just wanted to show a classic picture for crypto guys. And it was the 3 drive. Last night, Trader Main was tweeting about Bitcoin, and Bitcoin was looking kind of heavy. It was here like a flag. And I said, I think it could break to here. Plus the leadership, Ethereum's been the leader. And
there's a lot of crypto bulls out there right now, and this is the one thing I do want to say about it. We are holding that 20,000 level, but man, if it was such a big value, I guess the thing is I want to say is that it's holding above 20,000, but you would think we would have been, based on the moves we've seen in crypto over the last couple of years, you would have think we'd be well over 30,000 if it was such a value play down here. The fact that we can't get much more of a, I don't know, what is it, maybe a 7-8% rally from those levels, that's scary to me. I don't know about you guys, but crypto acts like crap. I mean, it, like I said, it should be trading much higher right now.
No, that's not an ugly chart. It really isn't. I mean, it's Ethereum, but it's over the 50-day and just moving kind of sideways up here.
Yeah.
But this candle distinguished it from Bitcoin. Ethereum led on the way down. Maybe it's going to lead on the way up if there is a way up. Just an observation.
Yeah, a lot of people talking about the merge. There's like a big Ethereum merge, and that's why it's valued higher over Bitcoin. And maybe that's the way you trade crypto right now, not against the dollar. You trade them amongst each other, and maybe that's the way. And Dale, I heard you talking a little bit about the Aussie. I actually picked up more Aussie on Friday. I just sold it this morning, what I picked up. But that's like my big play this week. It's really do or die for the Aussie dollar. Let me show you guys. If you did not see the week ahead video, I want to show you something really quick on how I'm viewing the Aussie. I think it's really critical. When you see technical levels and you get what we call like a triple confluence, You got the 50% retracement of the last big move lower. You have, this was the breakdown point from back in January of this year. So you can see that was the, you know, that was like a key support. Also, you know, it's the descending trend line. So, you know, we get above, you can just call it 70 cents. If you get above 70 cents this week, that's a pretty clear indication that we're going a lot higher in the Aussie. My cost average is well below current levels, but you know, there are times in the market that you know, I get more aggressive, and this is one of those times in the market where I'm going to get more aggressive long Aussie dollars on a breakout this week. And, you know, so by the end of the week, put it this way, by the end of the week, if we're trading above 70 cents, I'm going to have a more aggressively long position than I already have now. And, you know, and that's, you know, a lot of traders, they ask, like, when should you size up a position? When should you, you know, be smaller in your size or larger in your size? This is one of those situations where I'm gonna increase my position size, and especially, and probably, you know, I'm gonna need this as confirmation, as if stock futures continue to rally and the stock market continues to rally. But there's a lot of dollar pairs setting up right now, and so I want to ask you, Dale,
if Aussie works, you buying everyone a case of Forsters?
Yes, and some what is that?
That's the Aussie bill.
No, I know there's all sorts of Aussie.
Castlemaine Forex. That's a good one. You know the Forex one? 4X's. No?
Oh,
no, I don't know that one.
Drink on camera.
I don't know that one.
Kangaroo burgers.
But check this out. You know, this is kind of like confirmation that you would get with the S&P. You know, you got the S&P that's actually, you know, below this. This is a descending wedge, right? Inside of a channel, but you got it above the descending wedge trend line. You get above this 4,100 this week, which is also here. Let me just take this over here. This is 161% extension of the last move lower. It's also the 38% retracement from the all-time highs. So you can see how big this area is going to be. And if the S&P gets above 4,100, my opinion is we're going right back to the 200-day moving average. So, and we've been talking about like the summer, you know, suggesting there might be a rally coming, you know, the summer. I guess the question is, why can't we get back to the 200-day moving average? What do you guys think? Is that even possible? What do you think, Dale?
Yeah, it's possible. I'd look for a break to buy this week on the Fed. I think that we're going to pull back maybe to 38.5 or so.
So and ultimately it has everything to do with the Fed this week. I mean, it really does.
Yeah, it's like it kind of de-incentivizes me to put anything on.
Yeah, I heard you say that a little bit earlier. I was updating on ForexAnalytix. I was updating the support and resistance levels. These are all manual, by the way. These are manually inputted by our team,
which means a lot of work.
Yeah, it's definitely time consuming. It's you know, it's not some algorithmic. You know, these are manually put up by myself and other team members, and so I was doing that. Just a minute ago, when I was listening to what you were saying, you know, regarding not taking any positions. You know, this is the time when I'm actually scaling back. If you were in the ForexAnalytix chat room, you can see in the trades room, I've actually been pulling positions off. You know, on my open positions, I've been taking off size this morning, and I'll probably continue to do so as we go through this week, because I don't want to be over leveraged going into not only the Fed, but the GDP numbers. So this is the time when I try to reduce, and once I get confirmation that the Fed is going to do whatever it's going to do, then I can always add to positions from there. So anyway, that just some thoughts. No, thanks, Dale, for your thoughts. What do you think, Kman, going into the Fed this week?
Yeah, I'm more exposed in crosses than the dollar right now.
That makes sense. Yeah.
A little bit of Kiwi. Well, yeah, the long-term silver, but that's a different story. I really don't have much on in dollars right here and now. I'm rather watching the ranges, perhaps do some short-term stuff. I think the Kiwi I'm going to keep and add if I get a decent dip again, 62 or below. And for the dollar-wise, the rest is just going to be short-term jobbing, really. But I am in a few crosses. I still don't like the euro, but not versus dollar. I'm not short euro dollar, but I'm still short some euro crosses.
Okay. Well, yeah, and that makes a lot of sense to me. You got like, let's talk about risk on. Let's just imagine stocks continue to rally. I think one of the better looking crosses is the Euro Aussie. I mean, the Euro Aussie has broken out of this wedge. It broke out a couple weeks ago. So all we did was break down, consolidate losses. Then we broke the 618 retracement. So this Euro Aussie actually looks like we can go a lot lower from here.
That's what I'm short of.
You're short Euro Aussie. It makes a lot of sense to me. And again, being below the 618 retracement, and you know, it's pretty telling when you have a currency pair that breaks in one direction, and this is actually for any market instrument for that matter. When you see a break lower or higher, and then you get a consolidation, there's something that many of you have heard me say this over the years. What does not go up usually only has one other direction to go. So in this case, you break down and then you consolidate at the lows. Well, chances are you're just going to continue lower. It's a continuation, very bearish price action type of move, and that's what you're seeing here. And if we get that rally in equities, one of the things that you might see is the Euro Aussie continue lower. What do you guys think about the Euro Sterling? I think there's been a lot of talk about this move this morning because we're breaking lower in the Euro Sterling. So what do you guys think here? Let's go to Ryan because I know you focus on this one a lot.
Yeah, I'm still long this one. Might make a decision into the summer weeks as to whether I cut a lot of the trade because it's just bleeding on the carry. Giving it to the broker. I don't like giving money to the broker. For me, on the bigger picture, it's not doing anything. We're in this sort of 84 to 80, 86, sometimes 87 range. It really is doing one of its going sideways things again.
Yeah, it really is.
Yeah, it's a difficult one. It's hard to sit on this one for a long time unless you've really got some patience. I did try this area before, this 84, 80, 85 zone. Last time we broke back through it, tried a short-term long with a view to add into my core, but that failed. I think I'm likely to more look to see if we get another move down to the 84s, low 84s, 84.20 area. Maybe have a look to try it there.
Yeah, I mean that's I guess these probes below the 200-day moving average are offering some buyers, some opportunities for buyers to step in. All right, well, thanks for that. And Ryan, going to you really quick, how are you feeling about going into the Fed this week? And Stelios, I heard your commentary, but maybe some people didn't about where you think the Fed's going to be. I want to hit you up next. So Ryan, what are your thoughts here with the Fed?
Yeah, always these big events, you look at where the risk is. Where is the big price risk? We know we're pretty much nailed on for 75. That's not going to be a shock. So anything less than 75 is the shock.
Do you think that's even possible?
No, I don't think so. I think it's 75. But as I say, it may not stop the market getting antsy, particularly with something like the consumer confidence data tomorrow, which will have those inflation expectations. If they're softer, that might get the market running a bit negative for the dollar. And then you got to think, if the dollar dips far enough from where we are now, you got to think, well, they're still going to go 75s. It's not going to change on one print. Maybe that's a little opportunity. But I'm just in snipe mode up until then. I'm not interested in picking a side right now. I am looking for maybe some hawkish news to get dollar yen back up towards the highs, in the 138s, because I think that's a rally sell at the moment. So anything up there like that, I'll be looking to get short into. It's just about planning around the other side of the Fed rather than what happens over it.
Well, speaking of the dollar, I wanted to point out that the dollar is at the 38% retracement. The last major leg that we had from this low in late May to the, I don't want to say all-time high, but to the trend high, multi-year highs, we're at the 38% retracement. This is not a level that is too far off of where we're at the end of last week or mid last week. But we're really, in an ascending channel and near some pretty key levels of support. And I think this is the channel that you need to be watching going into the Fed meeting this week, because I think the inflection point for the dollar is really going to be around here. So, you're talking around the 105 level, which is going to be the channel support. And I think where we need to be watching.
105 too.
Yeah, exactly, Dale. So you can see it right here. I mean, it's going to be some pretty key levels of support, and that's probably going to coincide. I'm just thinking out loud right now. It's going to coincide with the euro dollar at 103.50, right? So, and everybody knows that 103.50 level is going to be really, really big, support, or I'm sorry, resistance for the euro. And Kman, I heard you say this, and I want to get clarity from you. You said something to the effect of you could see the dollar and the euro weakening at the same time.
Yeah, so euro dollar staying in a range, and that's one of the reasons why I'm short a few euro crosses. But on the other side, probably, yeah. I mean, and I'm a little long Kiwi as well. So, and I might be adding Aussie as you were pointing out as well. Yeah, that's it. The mood in the markets seems to have changed a little bit. Okay, euro dollar could go up because of a weaker dollar, but if you look at the crosses, euro is not that strong. So I can see probably euro dollar move slower than the rest.
Yeah, like one of the pairs that I'm focused a lot on is the U.S. dollar and Norwegian krona. If you guys are ForexAnalytix subscribers, you can see it right here. We have an ascending wedge breakdown. From whatever this is. That's July.
A beautiful picture.
20th.
Simon was mentioning that when it was up there near the high.
Yeah, I mean, we have this ascending wedge. It broke down, and now it's got a bear flag pattern. And the bear flag pattern, you can see it, developing. And sometimes you got a pattern and a pattern, right? So this is an ascending wedge, bear flag pattern, points to 154. Happens to be our original target level, or 954 original target level in the U.S. dollar.
Forex Analytics.
I know, but yeah, this is trying to break down here, and this is a good example of what Kman's saying. Is you're seeing a move in some of the other currencies and not necessarily the euro. Kman, I know you on a trade desk, and a lot of professional FX traders at banks trade the euro NOK. Whoops, I just completely jacked that one up. This is a very popular pair amongst a lot of traders that I traded with, that were previous traders at like Barclays and Citi actually, and what was that? One of your Japanese Nomura, excuse me, and they always traded the euro NOK. So what do you think about? Is this like one of those crosses that you might trade as well?
Oh yeah, I've to be perfectly honest, I haven't traded it for a little while, and I'm a little disappointed with myself there, to be honest, because it did put in a decent rejection once we once we broke back under, what is it, 10.20 or something, and
yeah.
It wasn't looking great then, and but I haven't traded it. Yeah, it's a pair, and I was saying on the flow show, all in all, I'm still trying to buy trying to buy NOK dips, because Norway is on a fundamental basis. Norway is going to be a beneficiary for everything that Europe wants to get concerning energy, for what it can't get from Russia. Norway should be a beneficiary.
Stelios hates Norway. Hates it.
He hates it.
I used to
over there.
I used to trade. You didn't mention me. I used to trade Euro Norway a lot, always on the short side, especially when the carry was really, really good. I mean, it's still positive.
And by the way, I am being completely sarcastic about that. Kman, he is actually one of the biggest Norway bulls out there is Stelios. So Stel, what do you think about the Euro Norway right here?
I always traded on the short side. Let me leave it as that. The question is, where's a good entry level? Because we've seen the kroner just get annihilated when we get risk off.
Yeah,
absolutely annihilated. And you saw dollar Norway above 10 quite substantially. And I was waiting for 10.50. Unfortunately, didn't get it. But I like to sell rallies. The end. So,
this is one of those that you should be paying attention to. Whenever there's a complete meltdown in the market, let me do this. Whenever there's a complete meltdown in the market, this is a great. Oops, let's see. That's not what I wanted to do. Here we go. That's what I want to do. This is a really good example of what happens when the S&P comes crashing down during the COVID lockdown. That's what happened with the U.S. dollar Norwegian krone. I mean, that was a hell of a move. I mean, was, thank God, not on the short side of that one, but a 30% move in FX over the course of a couple of weeks. That's ridiculous.
Look how strong it's been compared to the dollar.
Yeah,
the dollar took out those peak highs over there.
I mean, I think the dollar. This was a gift, obviously. The U.S. dollar, Norway, or Norway longs at that point when it was above 12. That was a gift, but it was hard to. It's hard to see at that moment in time.
Yeah, at that time we had the COVID crash. Everything was going to hell in a handbasket. It's difficult to get in front of it. I caught a little bit of that move. Unfortunately, not enough. But
one of the things that we've been pointing out, because U.S. dollar Norwegian krone is a pair that we cover every day in our private ForexAnalytix shows that we do. But one of the things, and you can see it, we cover it every day on the bias chart. It's one of my favorite currencies to actually trade, to be honest. I love the way it moves. But you'll notice that we're stalling around the 50% retracement of the COVID move. So that's a big deal. It's a big deal because it's a big, retracement level that a lot of traders are going to look at. So, and we're seeing obviously a big rejection now. So it's just one of those things where, Kman, you're pointing out, as the euro continues to stay weak, what currencies are actually strong? There's a lot of them out there. There's the Aussie, there's the Kiwi, there's Norway. Even the loonies performing better right now. So what does that tell you about what we're seeing? We're seeing all these commodity currencies act better than the euro, and that's one of those things that you need to cue in on if we get a strong market move in the S&P, in the NASDAQ. You start to see the DAX look a little bit better, which it is. You start to see, even Chinese markets are finding support around some key levels of support. So, if you see risk improve globally, you're going to see these commodity currencies start to look a little bit better as well. So anyway, we got about 2 more minutes. Do we have any data coming out today?
I don't think so. No, it's
we don't. So Dale's got an interview coming up. Really quick.
No, he doesn't. He canceled.
Oh, you had a cancellation from Michelle? From Mish?
No, Mish is I think tomorrow.
Oh, Mish is tomorrow.
It was Slim. Ask Slim.
Oh, okay, cool. Well, because I was like, Mish she never cancels, so that's good. I like Michelle a lot. All right, so really quick, what else are you guys thinking? I mean, here's what I wanted to say, but go ahead, Stelios, and then I'll say it.
I was just going to say my view on the Fed, because you asked before, but you never actually asked me. So
oh no, you know what? That's because honestly, I don't really care.
Because you don't care. No, my view on the Fed is simple. I think they're going to do 75. There's very little chance of either 50 or 100, but the risk slowly starting for them to start to hint at taking the foot off the accelerator slowly. Other central banks are starting to catch up, and I think that's the risk. I think in the short term, the S&P is going to head towards 4,100, which coincides with what you said about the Aussie, and a little bit of more dollar weakness. But then after 4,100-ish in the S&P, I think we get one final leg lower. So, just my view on what happens is, 75 is priced in already, Richard. Yeah.
Okay, so let me ask you guys this, because and we have a few people asking about metals, so I'm going to talk about metals as well. But I want to ask about Janet Yellen over the weekend. She said there's a path forward without that avoids a recession. We have advanced GDP numbers coming out on Thursday, and those might actually suggest we are in a recession already. First of all, I want to ask you, did anybody listen to what Janet Yellen has to say? Because Sunday at home with my family, the last thing I wanted to do is listen to Janet Yellen. So I avoided her like the plague yesterday. Did anybody catch what she said, and how do you see?
That's basically it.
What's that?
You said what you said.
That was basically it. Okay, I read the headlines and then I continued on because I'm not really paying attention to what she has to say now that she's not the Fed chair. But we have GDP numbers coming out, advanced GDP numbers that are coming out on Thursday. So are we in a recession? Is it a mild recession? Does it even matter? I mean, because those, it's like, is it going to? I don't think it's going to be a prolonged one, because we're still sloshing around with a lot of liquidity out there. But what do you guys think going into Thursday?
I don't think it matters. Look at the data. The US is still the best of the bunch.
Yeah.
We're not. The jobs market's still very strong. Until that starts turning around.
Yeah.
Inflation is biting, and that's what the Fed are trying to combat. And they've said that there's going to be some pain, but until we start seeing the jobs market turn around and people becoming unemployed, and then you really start to see perhaps inflation coming down, that's going to be the crunch point. Not what happens in Q2, what happens in Q3, Q4, Q1 next year, because it's all about the soft landing. Can they achieve a soft landing, or is it going to be a crash and burn? Because if you're getting growth negative 3% Q4, Q1 next year, then you've got troubles coming, and those rates are going to come tumbling down again, and then everyone's going to go QE bananas, and I'm not looking forward to it.
Yeah.
I saw Larry Summers being interviewed by Fareed Zakaria, and he says yes, recession, but he seemed to waver whether or not the Fed is going to have the political will to do what's necessary to really deal with the problem. It almost sounded like he doesn't think they're going to, once things start getting tough, that they're going to pull back.
I would think that too. At least,
he said
Fed,
that'll be a mistake, but he thinks they may do that.
But the Fed's got levers, right? That's the whole. That's the whole thing about not only interest rates as a whole, but it's also guidance, right? That's the thing. They use their words, and that's their most powerful tool. And if most of you know that that's been my take on the Fed is their most powerful tool is their words, while they're still respected.
Their jawbone is
their jawboning, and how the Fed could theoretically, they could actually stop being so hawkish with their words, and that's going to have a lot of reaction regarding inflationary pressures, market reaction, how the S&P reacts, the housing market in the U.S., all of that can be affected by just their words. because they still have credibility. I know some of you are like, the Fed's, they're, abolish the Fed and they have no credibility, but they do. They do have credibility. And the reason why they have credibility is because when they do talk, it still moves the markets. The day that they keep saying things and the market doesn't respect what they have to say, that's the day that the Fed loses credibility. And everybody that knows, you'll hear people on social media and they'll make YouTube videos and say, Fed's lost credibility and abolish the Fed, blah, blah, blah. That's not true. It's not true because they still move the markets exactly the way that they want them to be moved.
I disagree, Blake. They lost credibility when they spent a year and a half telling us there was no inflation. Inflation was transitory, and then they didn't know where inflation was.
Okay, how do you get that back?
If they've lost credibility, which I agree with you, I agree that they had a bad call.
Yeah, but they're not supposed to have bad calls, Blake. They're running a whole country's finances or monetary policy. But
you're right.
I will add, let me add before you crack on. Okay. The market has goldfish mentality. The market doesn't care. All it worries about is what the Fed is going to do now and in the next 3 to 6 months. It doesn't matter
that means they have credibility, right? Because the market still respects what they have to say.
The market cares about it. But for you and me, and your average, other person, they got it wrong, and they got it wrong big. And any pain that they cause now is their lookout, and they'll try and cover it over and hide behind the fact that they're doing it now. But if you're talking purely not from a market sense, they lost credibility 2 years ago.
Yeah. Well, the market still cares what they have to say, right?
Yeah, they care about their next mistake.
Yeah, and right. Well, yeah, because they're like, but you could say they lost credibility, but okay, what does that mean? That the ECB becomes more credible? I mean, what?
No, they lost
as a market,
Draghi left.
But as a market participant, you go, okay, the Fed's less credible. Now what? Now what?
I just remember
there's a difference between us talking as just shooting the breeze, and there's us talking from the market's perspective. There's always two sides you come from. So from the market's perspective, it doesn't care about credibility; it just cares what it's going to do and now and what they're doing in the future. That's all it cares about.
Yeah.
I remember.
But I guess it's kind of funny when people say, "Oh, the Fed's got no credibility," but everybody hangs on every word the Fed has to say. And that's the thing is, it's like it's the same thing as like, market's wrong. Well, no, it isn't. It's going whatever the direction it's going. You're wrong right now, betting against the market, and you're just upset because it's going against you, right? It's the same dilemma that we're in. But anyway, that's a debate for another time. Somebody asked about gold, and we can go back into that if you want. But I actually really want to talk about precious metals really quick, because I think precious metals like gold formed a really important low. But here's the question I want to ask you guys before we sign off, because silver hit the big 618 and it's holding it, but I thought we'd have a bigger reaction from the 1830 level. Here's gold holding, 1680, 1675, really key spike levels down here. Do you think that precious metals can hold above these?
It looks weak, that's for sure.
1630 gold is a target I have.
1630 gold. So Dale says no. Stelios says they look weak, but you didn't answer the question.
Bulls are bearish.
Is gold going to hold this support or not? I'm asking you. Not. Don't give me some wishy-washy crap. Tell me, is it going to hold it or not?
No.
He won't admit it.
If I have
you
to say,
are such a wussy, Stelios.
I'll say yes. I'll say it's going to hold.
It's going to hold. It's going to hold. That comes from a gold bug. All right. Thanks, Stelios, for stepping up. Ryan, what do you think?
It's held once. It can hold again. The question is,
it's held 4 times. 1, 2, 3, 4.
Ryan's going to see why people wait for the flush to buy it. Now, it was a good trade.
That's Trader Dale talking. Dale's going to wait for the flush, right?
Yeah.
Dale's going to wait for the flush, but I guess the question I got to ask, Dale, is do you miss the move higher because you sat there and you're greedy trying to wait for the flush? I think it holds.
Because I'm already
I'm gonna be honestly, I think it holds, but that's my opinion.
No, I don't miss it. I don't miss it because I'm already underwater in minors.
Okay. Well, because you're long or you're short?
Long.
Oh, okay. You're long. Well, hopefully that helps you out here. Kman, what do you think?
I think
feet to the fire.
It has a fair chance to hold. It's also, if you look at it from the longer term, it's also a bull flag, in a way,
the long term,
or whatever. It held 4 times that that line. I think it has a fair chance of holding, to be honest.
Yeah, and
especially if we get a Powell who tells us Thursday that they might not be that or much on autopilot anymore going forward, but we will have to wait, of course, for the press conference. But and there's also a reason, in my opinion, and I was talking about that on the flow show, why silver is not performing in the same way. The bounce from the end of last week is not as spectacular, is because it's an industrial metal, and if data start to weaken, we might see the gold-silver ratio pick up a little bit more before silver really hits its bottom.
Oh, yeah, that's a good point. But Dr. Copper's
that's just crazy talk, man. It's crazy talk.
Come on, Stelios, come on. Hey, I want to say that I want to say that those are some really great points, guys. And here's the other thing I need to say about gold. If gold breaks down, and we do break this level, that moment that it breaks, I'll probably turn around. And doesn't matter what I'm doing, but if gold breaks that level, I'm going to be buying the dollar across the board at that moment. So I'm just letting you guys know that's going to be like, if I see gold breaking down that level, I don't care what I'm doing at the moment. I will just be buying. I'll be buying dollars. So, whether it's short euro, long dollar Swiss, I don't know. Maybe even long US dollar Swedish krona at that point. I'll be buying dollars across the board on a break lower of gold, and that's my play if that happens.
Any new guys pass assessment last week, Blake?
We had I don't know, Stelios. I wasn't paying attention so much last week. It's been slow as we were summer months.
It's been very slow the last couple of weeks. Yeah,
I think people are on vacation.
We had 1 or 2 people, but it's been very slow compared to other months.
Yeah, other weeks we've had multiple people pass their assessment.
Gotta wait till September now.
Yeah, so guys, if you haven't checked out the trader funding program. I was actually just talking to this last week about to somebody about being in this position of being able to offer people the opportunity to trade larger amounts of money, and I'm like, man, it's great because you got a lot of I'm just going to give you an example of this. You got a lot of crypto people that have taken some major hits on quote unquote their portfolio, if that's what you want to call it, but what they had on paper at one point, and they're like, shoot, I don't have access to these larger amounts of money anymore, but I can trade. I really want to trade. Well, this is a way that you can do it, and you don't take any risk, and you only make 75% of the gains. But from a prop trading standpoint, that's a higher percentage, way higher percentage than I used to make as a prop trader. So in years past, so you guys get some pretty large payouts here. So anyway, if you want to check it out, the trader funding program is, and you get to be in the ForexAnalytix community and see look, if you're in the trades room, just give you the trades room alone, and you see people like, there's Brand, there's Mark, there's Kman that you just heard talking, there's me showing you, hey, I just bought this, sold that. Hey, you got some different ideas. You're not kind of left out in limbo, not knowing what to do, or not having any trade ideas. We help provide those. So check it out. So team, any last minute thoughts before we head out for the day?
No.
The one thing I wanted to say in regards to what you said just before talking about the trader funding program about the Swedish krona.
Yeah.
And it's a very good point, because the Swedish krona usually is an accelerated euro.
Yes. Yeah. And why is that, Kman?
Because of its proximity and euro being its largest trading partner. And then on the other side, it has a lot less liquidity than the euro. Euro is the biggest liquidity out there, euro dollar, for instance. But if you look at the Swedish krona, it's usually an accelerated euro.
That's awesome. That's a great point. I actually haven't traded the Swedish krona recently, not as because I'm trading Norway more often, and so I haven't been trading the SEK so much. But that's definitely one that I've traded over the years, and it's fun. It's fun.
A little blonder than.
That's funny, Dale. All right. Hey, Dale, I'm glad to hear that you're feeling better, and it sounds like you sound. Well, you never really sounded too sick having COVID, but it sounds like
I really had a light case.
That's great. Did you take did you end up taking the antivirals? No?
No, I didn't.
Oh, look at you. That's awesome.
I saved them for someone that would need them.
Awesome. You're a beast. All right, Dale. Well, team, thank you so much for being here with us and
only
and
the good die young.
Listening in. Dale, I'll let you close us out.
All right. Guys, we're going to have a great week. We're all going to be prepped for the Fed. Just trade lightly and scalp, and these could be very important inflection points. So like Tom Petty says, waiting is the hardest part, but we could wait together and sharpen each other up, just like iron sharpens iron. That's what we do when we share ideas together. So don't just count your pips, count your blessings, and we'll see everyone for Turnaround Tuesday. Thanks, team. Best team on the net.
Guys.
Thank you, Blake.
Best team on the net. And you know what, Kman?
Say again?
When I hear someone say, let me be honest with you, you know what goes on in my head? I say, why me? Let me be honest about this. I'm going, well, was he BSing me before this?
What have I done wrong?
Anyway, huh?
What have I done wrong?
So I would just say it's an assumption that when you're sharing things that you're doing it, honestly.
Absolutely.
All right, man.
Thank you.
You don't have to qualify it, but thank you for being honest with us today, bro. Anyway, have a great week. I'm only kidding around with you. And it's like when I asked Luke Groman when he said we, when he's talking about his analysis, we. I go, well, who's we, Luke?
Oh, you know what? You know who does that? Joe was just ripsters in our chat room. He does that to me all the time.
Oh, we?
I'm like, oh, here's the euro dollar. We're going down to what? He's like, who's we? And I'm like, damn.
Yeah, I know. We talked about this, Anyway, that's funny. All right, guys, have a great day trading. See you tomorrow. We're going to have a great week, as Stel said on Skype earlier today.
Thanks,
Adios.
team. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.